Guys, you are not ready for what is coming. Hi everyone, welcome back to today's video. In today's video, I'm just going to go straight to the point. I won't be taking much of your time. I just want to show you guys the trade I took on Friday, which was the first trade I'll be taking after joining a mentorship. And the result I got, I took two trades, one win, one loss. So I'll be talking about that in this video and what I see differently by joining the mentorship. And guess what, guys? I just joined the mentorship like last week itself. So I've just been going through the materials. I've not even completed going through the materials, and I've already started seeing results, which is a good thing. And yeah, to not take much of your time, let's just dive into the chart. Go through the chart and just say what. So I hope you guys can see my screen right now. I hope you can see my screen, can see my chart. So I took two trades on Friday. I took a trade on GU and I took another trade on EU. So I'll be talking about the let me start with the EU first, because I think the EU was the one that actually have a losing trade. I'm gonna start it with the EU and talk about it. As you can see, I've already played the market back to right after the Asian period. This mark zone is the Asian period. I'm using this Q zone indicator, so it shows me the Asian period. And what I figured out in this is that going from the 4 hours time frame, I was on the 15-minute time frame before, but going to the 4 hours time frame, we could see that 4 hours, we're breaking the high, we're coming back to the extreme low right now. So we are expecting some form of reaction, rejection, or whatnot from this low, because this is the extreme 4 hours. If I should mark it, we can see that there is a break of market structure to the upside here. BMS, if you've been watching my video, you realize that I now have some different lingos. I don't use BMS before. So there's a break of market structure to the upside, and now this will be our change of character if this low goes on 4 hours, right? So that's being said, realize that 4 hours is still bullish right about now until this low goes. So I dropped down to my 15 minutes to look at what is happening on 15 minutes, and we can see that 15 minutes is bearish, right? 15 minutes is bearish and we are still pretty much bearish. But because we've tapped into this extreme 4 hours low, I'm looking for buys now, right? On 15 minutes, I'm looking for 15-minute opportunities to buy. And what could I see? I could see that we've choked to the upside on 15 minutes on this low, like this little change of character, little other block that we have here. This little other block that we have here, we've choked it to the upside. So now that I see this, I'm looking for an opportunity to buy. Then what happens next? We choked to the upside again, right? Now we created double low or equal low. And looking to the left, you can see, you can identify an imbalance to the left right about here that was created. And then we have this other block right here. And one of the things that make another block valid is if it have an imbalance, and as you can see here, these have an imbalance. But what I was looking at was that before the imbalance, we have this sell to buy before the imbalance, and we have this sell to buy after the imbalance. And the position of the imbalance to where the other block is kind of far. It's kind of far from each other. So I marked the imbalance zone itself, and I marked the zone, and I'm looking for the two to just look for trade from. So let me just play forward, and markets push up again from this low. I've already marked it as my liquidity, and then we break it to the downside. I just wanted to tap into this. As soon as it taps into that, I drop to my 1 minute to look for a confirmation entry. Let me push this to the front a little so it did not get in the way. Okay. So I look for a confirmation entry, which is for 1 minute to choke to the upside, which is basically the same thing I was looking for in 15 minutes. That's what I'm looking for in 1 minute as well. So what did 1 minute did? 1 minute choke to the upside right here. We have a 1 minute choke to the upside right about here. Then 1 minute gave us this low, which I was looking at as a liquidity as well. Even though I marked it, I was looking at it as a liquidity. I was expecting market to sweep it, and then I set my entry right below here in this other block that we have down here. We have already filled in the balance, so I just feel like okay, this should be the liquidity to come right back into it. And what did market do? Markets came right back into it, reacted, moved up a little, and then moved up a little, and then it eventually break. So after it broke, at this point, I just left the market. I did not decide to like re-enter or whatnot. So that was a loss. The main reason I was actually happy about this trade was that this zone was never invalidated. And again, if I play forward, you will realize that my bias is actually correct. My bias was actually correct. Market goes to the upside from that zone, and it also reacted and rejected from the zone I'm looking to sell from. So let's jump to GU and see what happens. So on 4 hours for this, you can see there is a break of structure to the upside or break of market structure to the upside. And now we are coming back to this 4 hours extreme, right? So we're breaking all of this. And then there is something that happens here, which is why I actually bring us here. You can see that this low right here is a demand on 4 hours. So as all these lows, they are demands on 4 hours. So when we go to 15 minutes, we can see that this low that was a demand on 4 hours was reacted to right here. So it gives us this zone, which was a demand to supply flip. So now this entire range becomes our supply now, which is now where I'm looking to sell from, because you can see that was the last supply that reacted to a strong demand zone, right? And again, if you look very closely, this supply, after it gives this reaction and then we break to the downside, right, it gives a liquidity, right, this buy to sell before breaking again, before giving us the second break. It gave this buy to sell. Then there is this wick that just come and sweep it right here. Let me highlight it for you guys so you can see right about here. You can see that wick, that wicked wick.
Wicked. He's just weak.
That came to sweep that. So I identified that, okay, this zone should be a strong zone. Why? Because this week swept liquidity before it continued. And also, I'm having in mind that this week itself can be used for as liquidity for this extreme. And the main reason I did not mark this was because there was no imbalance before it, but there was a imbalance before this, and there was an imbalance before this. So I marked these two, even though I know this is just a buy to sell after everything has happened. I wasn't looking to trade for a minute, but I'm expecting a form of reaction. Now, with that understanding in mind, let's go back to what happens. You can see 15 minutes continue going to the downside, then we break market structure to the upside, and then we enter a solid range right about here. So, yeah. So after the continuation of this, I was expecting this low to sweep, and we come back here for a buy. But market did not make it there. It did the same thing it did there. It just tapped right into, let me make this dotted line. Let me make this dotted line so it can be more visible. So it just tapped right into the liquidity, tapped into the imbalance and continue. Then that was that. I was waiting for another opportunity again. You can see that right on this, market reacted, right? So I was thinking, okay, maybe this reaction is going to come back into this low, right, for us to buy again. But what happens? It did not come into the extreme. So now we've tapped into this zone that I'm looking to trade from. But one thing I realize here is that before this POI, there was no liquidity on the left, unless I want to use this zone as a liquidity, which I also marked that it could be a possible liquidity. But before this zone, there was no liquidity. So I'm expecting some form of liquidity to be created in 1 minute. It was an expectation, but I will still trade it regardless. So at this point, we can see that sharp reaction from it. It did not break the low. And again, I saw these two. After this sharp reaction, if I marked it, you can see, if I mark it on 15 minutes, you can see that we created another 15 minutes order flow right here. We created another 15-minute order flow. So I've already looked at it that, okay, this is another 15-minute order flow. We have this low also that swept all of this liquidity before it break. So it should be a strong zone. And then it gave us a liquidity on 1 minute. It gave us this low as a liquidity on 1 minute. And how do I classify it, or why do I classify it as a liquidity? You can see that this low continues to break this 1 minute high right here, right? It continued to break this 1 minute high. So which means a lot of people will be buying from here. They call it smart money trap, right? SMT. Let me put it there. SMT. So a lot of people will be looking to buy from here, whereas I'm already looking at it like, okay, this is an inducement for this low, but there is a pattern that's actually currently occurring in this chart. If you realize, let me play this forward and I will explain the pattern I've already been seeing right now. So all I'm expecting for market to do right now is just to come and sweep this low, tap into this zone, and I'll enter. Then what happens? Market pushed up, then we start coming back, we start coming back. Then we swept the low, but it instantly just sweep it and then continue to the movement, right? As you can see, we just swept it, pam, and then it continue moving up, right? So now this is what I wanted to talk about. This is one thing that I just realized for GU is that you see this zone, this liquidity, it was swept, but how was it swept? It was swept and it doesn't really tap into the next OB after the imbalance. It was just swept, just tap into the liquidity and go. The same thing happens right here. As you can see, the same thing happens right here. We swept this liquidity, it did not come to the extreme. We just continue to move. The same thing happens right here. You know, I was saying like this last zone that we created this 1 minute, but we have this liquidity on 15 minutes. I won't even have traded this because I'll be looking at this extreme zone. But you can see that I've seen these two things happening twice now. So now for GU, I understand that liquidity could just happen this way, and if I just want to enter based on this, I could just enter on the next 1 minute structural break. For instance, in this zone right now, I could have just entered after we break this high and just protect somewhere low here, and that would have been a nice trade. The same thing right here, I could have just entered after we break this low and protected this, something like this after we break this high, and just protect this low right here, and that too would have been some 1 to 2, 1 to 3 trades. The target would be this high or this high right here, because we are coming into a supply that I'm looking to sell from. So if you can still remember, this is a supply to a demand flip that is coming from a higher time frame POI, which is a 4-hour time frame POI. So now we've reacted off of it. 1 minute is still even pretty much bullish, nothing is happening just yet. So we break back to the upside. Now I'm looking closely for a 1 minute choke to the downside, right? You can see that after this pushback and the break of this 1 minute was just going up continuously, and all I'm looking for now is a 1 minute change to the downside. So 1 minute choke bearish right here, chokes bearish right here. Then I just set my entry right before this imbalance that was created here, and you can see it's an overlapping imbalance. We have an imbalance back here, imbalance here. I set it there, I protected this high, and don't forget guys that it was Friday. NFP is coming right around the corner. It pushed the market up still to the point that it actually swept this high. It actually swept that high, and then NFP comes in, and then that pushed the market to the downside. And from the point of entry, so from the point of entry to the point of moving, you can see it took 1 hour 39 minutes. So at this point, I've already legged the market because I have a meeting. I have a meeting around that 1. So I've already led the market. I've already set my entry. I've already left the market. I wasn't in the market, so I've closed my recordings. But I will show you guys what's happens like before I close it, what was happening in the market. So you can see it take 1 hour 41 minutes before the trade later plays out. And what does it do? It goes right to break that 15 minutes low. And because I'm still learning and I don't have a proper grasp of the concept fully well just yet, I later find out that I could what should be my target should actually be this low, because this is the extreme we are expecting market to come back to give us some reaction that we can trade for. So instead of taking like 10 hours out of the market, I could have taken 19 hours out of the market. So guys, that is how I traded on Friday. And trust me, I'm really excited that even if I'm still not seeing that huge of a result, the fact that I'm learning and progressing, and I'm seeing a difference from the way I used to trade before, and the way I'm trading now. So the mentorship I paid for currently, the first one I'm still working on, is a very good money well spent, right? It's a money well spent for me. Hopefully, for the coming week, the coming months, and by next year, I'm looking to become a funded 100k, 200k account trader. Guys, you are not ready for what is coming. Let me just end it here. Bye for now.
Yeah, boy.